Warriors of price action and guardians of fundamentals, welcome to Retail Recon. On today's episode, we're opening up the trading book and going straight into the emotional mistakes that will bleed your account dry if you let them run unchecked. This is the first episode in the series, and it's about the stuff every trader thinks they understand until the market slaps them in the mouth. These mistakes cost money, every time. The only question is whether you catch them early enough to stop the damage. Mistake number 1, FOMO, fear of missing out. That's when you see everyone else making money and your brain starts screaming that you're being left behind. Micron is ripping, semis are flying, your buddies are posting wins, and you're sitting there watching Walmart while the whole sector train leaves the station. That's the battlefield FOMO operates in, and the way it shows up is ugly. You chase price, you enter without a thesis, you ignore structure, you oversize because you want to make up for what you missed. You already know that's bad. The problem is, when FOMO kicks in, you stop thinking like a trader and start thinking like a passenger. How do you fix it? First, burn this into your head. Most FOMO trades lose money. Even when you're right, you're usually late, sloppy, or overexposed. So ask yourself, do you want consistency or do you want one random home run? I'm on the consistency side. I'll take clean execution over hero trades every day of the week. Yes, I will occasionally take a gamble, but even then I do it with a defined entry, a defined exit, and much smaller size. That's the real fix. Follow your structure. If the setup is gone, it's gone. Don't chase it into the grave. Wait for the next one. Keep a journal. Write down when FOMO hit, how you reacted, and where you broke your own rules. And if you absolutely must take a FOMO trade, then make it a separate category with separate rules and smaller size. If you're going to step into the minefield, at least carry less weight on your back. Mistake number 2, revenge trading. This one is personal for a lot of traders. You take a hit and your ego wants blood. Revenge trading is what happens when you jump back into the market just to get even. Not because the setup is good, not because the checklist is clean, just because you don't like being on the wrong side of the trade. That's when the damage compounds. It usually looks like this. You trade larger than normal, you force a setup that doesn't fit, you roll losers just to avoid taking the hit, you flip directions in the same name because you think the market owes you one. Revenge trading used to be a big one for me. I'd get stuck in a bull put spread, roll it down for extra premium, and tell myself I was fixing the trade. In reality, I was just turning one loss into a string of bad decisions. Another one of my classic mistakes, switching from bullish to bearish on the same underlying in the same time frame, only to watch the market rip the other way and stack another loss on top of the first one. That's revenge trading. It doesn't recover losses, it magnifies them. How do you fix it? Put in a no trade rule after a loss. For me, that means no trade on the underlying for at least one day. The pause kills the impulse to strike back and gives you space to reset like a professional instead of an emotional wreck. Mistake number 3, fear of loss, paralysis. This is the silent killer. You've got a setup. It checks every box. The chart is there, the thesis is there, the structure is there, but your finger won't pull the trigger. Or worse, you do pull the trigger, but with half the size, half the conviction, and half the execution you should have had. That's fear of loss. And it's just as dangerous as FOMO, only slower. It also shows up on the upside. You get a winner going, then panic and bail out too early because you're scared of giving anything back. So you clip your winners and let your losers breathe. That's backwards. You're going to lose more trades than you win. That's just the game. If you can't take your winners properly, you'll bleed out one small mistake at a time. How do you fix it? Trust your process. If you build the book correctly, then the book is the weapon. Enter when the setup qualifies. Size it the way you planned, exit the way you plan. Then review the book every month. Not in the middle of a trade, not after a bad day, after a full month. Ask the hard questions. Are my entries sharp? Is my size too big or too small? Am I hesitating when I should strike? Am I cutting winners too early? If the rules are bad, fix the rules, but don't let fear rewrite them in real time. Mistake number 4, greed. Greed is what turns a good trade into a stupid one. You're already up, the trade is working, you hit your target, but now you want more. You think the market is going to keep handling you free money, so you sit there, move the stop, extend the target, and tell yourself you're being smart. You're not. You're getting greedy. And greed has a nasty habit of taking a winner and dragging it all the way back to break even or worse. That is why I always say, take the profit when it's there. A closed win is a real win. An open winner is just a hostage situation. How do you fix it? Don't move your exit just because the trade feels good. If the trade hits your target, respect the target. If later analysis shows you consistently leave too much on the table, then adjust the rules after the fact, not during the fight. Mistake number 5, overconfidence. This one is dangerous because it feels like progress. You string together a few wins and suddenly you think you cracked the code. You're flying high, feeling sharp, and wondering how everyone else is still struggling when you've clearly got the market figured out. That's exactly when traders get sloppy. They increase the size. They loosen rules. They start taking margin they shouldn't be taking. They stop checking the box because they think they're above it. That's not strength. That's the prelude to a blow-up. Overconfidence is a minefield. It tells you you're fine right before the ground disappears under you. How do you fix it? Simple. Stay disciplined. Only trade what fits the criteria. Keep position size consistent. Don't get seduced by genius trap. The goal is not to feel invincible. The goal is to stay in the game long enough for your edge to matter. And with that, let's recap this mission. FOMO makes you chase. Revenge trading makes you tilt. Fear of loss makes you freeze. Greed makes you overstay. Overconfidence makes you sloppy. Those 5 mistakes can wreck a trader faster than a bad chart ever will. But if you spot them early, keep your structure tight and stay ruthless about your own rules, you give yourself a real chance to survive and compound. And with that, we wrap up today's episode. If you found value in this mission, be sure to lock in your support by liking, subscribing, and following our movement. Thanks for standing watch with me today, and until next time, trade smart, risk sharp, stay on target.